Understanding the difference between FHA and conventional can be very confusing. Let's break it down and make it easy. It's not that hard. So let's start with FHA. An FHA loan is insured by the federal government. It's the Federal Housing Administration. That usually requires is a 3.5% down payment. The nice thing with FHA is it allows you to borrow a little bit larger against your debt ratio. What a debt ratio is your income coming in versus your bills going out. And then we're going to determine what that ratio is. With conventional, it has a lower limit. FHA allows you to be more aggressive and borrow more against your debt to income ratio. So if your debt to income ratio is 50, that would mean you'd probably go half of your income coming in is going out to all your expenses. FHA would be a better option. If your debt to income ratio is slightly lower, conventional may be fitting for you, depending on your situation. FHA appraisals versus conventional can be confusing as well. An FHA appraiser will come in and do the same review of the house, but they're looking for specific items that conventional appraisers are not looking for, but not limited to peeling paint. That's a no-go with FHA. It needs to be remedied. Handrails, that's not going to work either. If there's no handrail and there's multiple steps, we're going to need one of those. If there's a crawl space or an attic above a garage even, we're going to need the appraiser to go in there to make sure that it's in working order. With conventional, it's not as stringent with those items, but when an appraiser goes to do an appraisal, they're looking at comparable sales the same way as they do with FHA and for conventional. FHA may be more lenient on your income and lenient on your down payment. On the appraisals, they're very similar, but do have the three nuances that we mentioned: the peeling paint, the handrails, and the attic review. With conventional appraisals, they may be a little bit more lenient on things that are as is. Now, either of these items, if there's safety hazards or anything that may not be ready for you to move in with FHA, you're going to have to remedy these. The same with conventional. If they're a safety hazard, these items are going to need to be fixed before you move you and your family into that house. With an FHA loan, you have the opportunity to buy a 1 to 4 unit home. So you can buy one unit and live in it, and then up to 3 others that you can rent out. When we qualify you for that mortgage, we can use the rental income from that rental unit and use it towards your debt ratio for you to qualify for a higher pre-approval amount. With conventional, there's multiple options. You can put as little as 3% down if you're a first-time home buyer, or 5% down if you'd like to be a little bit more aggressive with it. Conventional gives you the flexibility of a lesser stringent appraisal and the ability to go fast through the underwriting system because it's insured by Fannie Mae and Freddie Mac, but not backed by FHA. With FHA, it's very important that you understand these are for owner-occupied houses. This is not for investment properties. We have many products for investment properties, but FHA is not one of them. If you like this video and you want more information or you have any comments, please post them below. If you loved it, hit the like button and subscribe and follow us for more.